morning, everybody. As Rachel said, my name is Jane Cooper from UK Export Finance. I am one of 24 export finance managers based around the UK. We are a government department with our head office based firmly in Westminster. Our ultimate mission, our whole ethos, is to be here to support exporting businesses. Now, whether that's as a direct exporter or an indirect exporter, and I'll come to that a little bit later, we wish to ensure that no viable export should fail for want of either credit risk insurance or the ability to raise finance. Now, there are a number of ways in which we can help exporting businesses, and over the last 18 months, we've started to try and make more of a proactive role in matching businesses, UK-based businesses, with trying to win some lucrative contracts overseas, which they may not have had access to previously. Now, admittedly, if you're aware of what we do or have heard of us in the past, there is the reputation that we have been involved in supporting some of the very large overseas projects and contracts that your kind of businesses that are here today exhibiting at the Spring Fair may not necessarily have an interest in. However, it's very worth being aware of what we do. It's free, impartial government advice. And even if you feel it may not be benefit to your business at the present time, it's very much worth keeping an eye on our website, being aware of what we do, because there may be something that comes up in a conversation that you have that rings a bell and that you may be able to refer back to us. Now, back to that point of our reputation of being involved with the large projects and trying to help exporters win portions of that. We've had a couple of export affairs over the last few months now where it may have centred around a large infrastructure project, or it may have been relating to the development of an oil refinery. And you may think, what's my business got to do with that? But if you think about the whole construction part, they need things like catering equipment. They may need tablecloths. They may need cutlery. They may need just simple tools. And if you are an SME and can contribute some of those, then you have as good an opportunity as any of the large suppliers to be able to do that in a competitive space. So this is our whole ethos of trying to introduce exporting businesses or businesses that have that potential and exposing them to those larger contracts. That's only just something we've recently started to do, though. Our main area of work, when we are working with SMEs, centres around helping them to ensure that they have sufficient working capital to fulfil an export contract should that opportunity arise, or very importantly, making sure they get paid for that contract. There's no point having all the amazing marketing and amazing website, receiving that first export order, sending it overseas and not knowing how you're going to get payment. So we can help you manage those payment risks, identify those payment risks. Now, we do this with working very closely with our colleagues in DIT, with the trade advisors, so they will help identify opportunities with you. As the world is a changing place, and you may start looking at some of the sort of further markets that could be available and may have an appetite for your product, you may start to hesitate and think that some of those issues could be unmanageable. Selling to a different country, selling under different payment terms that may be expected, maybe working with letters of credit for the first time. That's where we can work with our colleagues in DIT, and whereas they can create the opportunities for you, we can then help manage those financial and payment risks. Again, trying to help get across the message that we are not just here, however, to support large manufacturing businesses. Just some headline figures that I thought were interesting from what we've done over the last few years. The important thing here, I think, is that actually 79% of our support has been to the SME market. I think the largest contract that we've actually supported has been low as £10,000. So we are willing to work with any size business in any market, as long as there's not economic sanctions in place, obviously. Now, over the last year, we've supported 221 companies. That may not sound like a huge amount, but within that, many of those companies have actually come back to us for repeat support. And when I talk about our products, I'll explain a little bit about how that works. What we want to do, though, is to change that number from being in the hundreds to actually being the thousands. And we do recognise that it's the small businesses that perhaps are new to exporting or aren't that experienced or are looking to new markets where we really want to try and help with that. Now, how do we go about doing that? We are part of Department for International Trade, but we also have a reported duty to Treasury as well, because ultimately we are using taxpayers' funds to underwrite these transactions. So we do apply a conservative approach, but we do have adequate capacity. At the present time, £20 billion of our target really has been used. We still have more than that to support, which is where we see trying to get our number up to supporting those 1,000 companies really lies. Now, in terms of helping exporters fulfil contracts, there's a couple of ways that we will do this. We don't work directly with the business, we work in partnership with your bank. So we're not here to actually grant funds or to lend money. What we will do is provide a guarantee to your bank to act as security. So if your bank is able to provide you with a loan, but you land a large export contract or a couple of them come along at the same time, what we don't want you to do is to think your bank aren't going to help or their risk appetite won't stretch that far. If we work with the bank and we can provide them with that guarantee to act as security, effectively underwriting that transaction, then they should be willing to then provide the additional funds that you will need. Now, it is around working capital for specific export contracts. So this is the point where once it's worked with a business quite well, then they will tend to come back to us afterwards because we can issue any number of guarantees. Obviously, the bank will have a limit on their appetite, as we will, but we can have different guarantees for different buyers that you may have, different markets, different contracts. And once the first one is done and underway, it becomes a much smoother process to be able to talk with us. Now, I mentioned at the beginning that at the present time we were working with direct exporters. From last year, we have actually been able to change and enhance our product range so that we can also work with what we term as indirect exporters. So if your business is largely domestic, however you know that you are providing a UK-based company and ultimately that order is contributing to an export contract, we can still provide that working capital support to you as a supplier to an exporter. So just bear that in mind. That's a recent enhancement to what we can do, and we're looking to bring this across potentially some of our other products as well, which is why it's worth keeping an eye on our website, just being aware of what we can do and what the changes may be. There's an interesting case here, and again, I was trying to find some businesses that we have supported that may be related to the businesses that are exhibiting here today. And one that I found was a company that's London-based, and they contribute or they provide bespoke furniture, soft furnishings and upholstery, primarily for the hospitality chain. They had an opportunity to secure a large contract for $7 million for fitting out a hotel in Dubai. Now, this for them was quite a step change in what they normally do. They approached the bank. The bank wouldn't normally be able to extend that far with their facilities, but we were able to provide a guarantee in place there. Now, in this instance, their buyer was prepared to pay an upfront deposit. Now, what they wanted in return for that, to ensure that our UK-based business distinction didn't go into liquidation, didn't fail to fulfil the performance, they wanted a guarantee back from their bank to ensure that should anything go wrong, they can claim their money back. And that is quite common. Now, what the bank will like to do is to sit on that cash as collateral for issuing that guarantee. But the effect of that, it ties up the working capital that the business would actually need to be able to fulfil that contract. So what we can do is replace the need for the bank to take that cash. So again, we will issue a government guarantee for up to 80% of that contract, which then incentivises the bank to pay that cash back to the exporter. Now, without that additional cash that was released from that, this company may have struggled to be able to find the working capital to fulfil that particularly large contract for them. But again, once it's happened once, it sort of takes the business to a different level. They may start to build a reputation in a new area, and as can often happen, more inquiries and potential contracts may be awarded. So it starts to become a spiralling effect, and again, we can issue more guarantees in respect to contractual bonds. Another interesting business, actually, which we assisted, was related to the sort of chemical, pharmaceutical beauty industry. Now, they had a particular crop which was very useful for contributing to the medication needed to fight the Zika outbreak. So when that happened, very sadly, the Italian company was able to secure large contracts to contribute more to their customers, but they couldn't grow at the rate that their customers needed. They couldn't meet their customers' supply. So with this, we were able to provide a guarantee to their bank to act as working capital. Another one, which is again similar, I can see some bakeware hanging up over there and muffin trays. This is again a company that specialised in bakeware. They won a large order to supply a German bakery. Again, their finances were slightly constrained. The German customer was quite a strong player in this arrangement, and they insisted on an advance payment guarantee. Again, it's the same situation as previously. The bank were happy to do that, but wanted to retain the cash. That wouldn't have given them the working capital they needed to be able to fulfil that contract. In this instance, the bank approached us, and they were willing to provide a 20% facility, and we provided the 80% guarantee that enabled that contract to take place. And finally, I have another example, which is more in the medical arena. Very specialist company that was looking at specialist footwear to help those suffering from diabetes. It tries to help to protect the foot. And again, they won for them a particularly large contract of $4.2 million. Without our support and without the support of the bank and us working in partnership with the bank, that contract couldn't have been fulfilled. Very importantly, as I mentioned at the beginning, is an area of making sure you can manage your payment risk. Now, in the UK, there is a very active private insurance market. We don't seek to compete with the private market. What our purpose is here is to fill in the gaps where the private market doesn't actually have an appetite. Now, what that means in reality terms is there's two aspects. There's actually the credit standing of your buyer or your distributor, but there's also the country that you're selling to and the political risk that they may prevent. So there are some developing countries that may pose quite unique risks. There could be the danger of civil unrest, the potential for war to break out. But also then on a financial side, there could be some countries that may have difficulty in raising sufficient currency to actually physically make those payments outside. They may have some sort of auction criteria where currency will be made available, but there's no guarantee that your buyer will be able to access that currency to enable that they can pay you. That is where our credit risk insurance has a particular benefit. We can insure against your about your buyer not paying you, the traditional credit risk, but we can also insure against that political risk. So I don't know whether you may consider or whether you've looked into insuring your debtor book previously. I know that businesses may have mixed ideas about this. With insurance, we have lots of mandatory insurances around the balance sheet, around assets, around vehicles. But actually, on some balance sheets, that debtor balance can be quite sizable. And it's still an asset to the business. And it's still worth considering the costs of insuring that, whether it can be accommodated within your margin, whether you can relook at your pricing to make sure you can cover that, whether you even have a staggered pricing, so that if people want to take extended credit terms, that you can insure that, but they actually pay a little bit of that premium within the price that you charge them. Now again, it depends on what your product is, I guess. If it's quite niche and they have nowhere else to go, then you're in a stronger position for bargaining. If, however, it's quite a generic product and they can go elsewhere, that may put a different slant on it, but it's worth being aware that this is available, it is an option, and we can provide you generally with an indication of what that may be based on the country that you're selling to. It won't cost you anything to have that conversation or just to try and find out what that will be. Again, if it's something that you choose not to do, that's fair enough, but at least you're aware of what is available there and an option for managing your risk. Now, just sort of the basics about the insurance. We can insure up to 95% of a contract value. So you will still need to have a little bit of a risk in there, but virtually all that contract will be covered for you. It's an interesting case study that we've had here, which is based in Northern Ireland. It's a healthcare company, and they were looking again at self-diagnostic kits for various complaints or conditions. Now they won, again for them, was a new contract with a new customer for $47,000 based in South Africa. They approached the private insurance market. They were unable to assist, and therefore they approached us, and we were able to provide them with an insurance policy. Now, as a small company, they were not prepared to take on that credit risk. But at least with our policy in place, it enabled them to fulfil that and to actually carry on and take further contracts from that business. Another dimension to credit risk insurance is if you are approaching your bank for finance, if your bank is aware that there is an insurance policy in the background, it again can impact on their appetite. They may be more look at that financing proposition more favourably because they know that there is a certain guarantee of payment underlying and supporting that. Now, one of the other areas that we can support, it's quite interesting, part of our role is working with banks, working with insurance brokers. It's quite interesting how many businesses that I may speak to on a weekly or a monthly basis that actually don't fit into our textbook products and services. My role then, and that of my colleagues, is to try and help that business find a solution in the open market, in the private market. So it's part of the benefit of having that regional network is because myself and my colleagues will be aware of what is available in terms of local grant funding, in terms of local or national specialist lenders, and try and signpost you to some of those solutions. Now, I thought this was a great example. It was done by one of my colleagues. I can't claim fame to this one, but I would have liked to because it was around handbags. So this particular organisation had been relatively recently established, and they had found a method for using recycled products to produce handbags. With the ability, or with the assistance of a very good website, they caught the attention of DKNY. Now, imagine having that opportunity to be able to supply those sort of bags. They didn't stand a chance of financing that on their own because they were relatively new. The bank, because of a lack of track record, weren't quite so keen to assist, where lies a dilemma, because if the bank isn't able to provide a facility, we don't have anything we can guarantee. So in that instance, my colleague searched around, he knew what was available in the local market, and he actually introduced the business to an organisation called Market Invoice. Now, they are essentially invoice discounters. They were able to offer a facility at a reasonable price to Bottle Top, and they were able to fulfil that contract. And how great was that for them, for a new business to be able to say they're suppliers to DKNY, and again, takes them to a different arena. So that's where a lot of benefit lies, with just being aware of what we do. As I mentioned, we are free, government department. The only thing that you may find you pay for would be if we go for premiums on the insurance policy, but anything around the financing options is free to you as an exporter or as a supplier to an exporter. And the reason for that is because we work in conjunction with the bank. We share the fees, we share the risk with the bank, so we actually share the fees with the bank as well. The bank will pay us for our support. So I just put a sort of snapshot of our website there. So please take note of that. There's some really interesting information out there about the variety of success stories that we've had. I just tried to pick a few that I thought may be of interest here today. But it also gives more detail about our product guides, And also, importantly, there is a link to our country policy. Now that shows our appetite for every single country globally, and you can get an idea there as to whether, if you're sort of looking to somebody or talking to somebody in some distant corner of the world, as to whether you may stand a chance of being able to secure finance, or whether there may be a possibility of insuring a trade too there. It also contains details of all our export finance managers. Now, we should all tell the same story, so if you pick somebody that's not quite in the right region, it doesn't matter. We'll all talk to you the same anyway. But please keep an eye on what we do. Keep an eye on the Exporting is Great website as well. And just talk to us. It won't cost anything other than investment in your time. Thank you.